What's up, guys? Hope everyone is doing well. In this video, I'm going to be going over some updates predominantly for Bitcoin, but at the end I will go over the gold chart. But nonetheless, to go ahead and get it started here, first off on the 4-hour chart for Bitcoin, so far it's looking fairly good with some relief found going all the way back to the local low around October 17th, around $103.5 thousand. Breaking here this first descending trend line here. Now the second descending trend line here that was briefly broken back to the volatile swing around October 21st, upwards towards around $114,000, almost on the dot. Hitting here, you can see the 200 estimated moving average, finding a swift rejection downward. Thus far, we've seen Bitcoin break back above the descending trend line here at around basically $111,000, right where finding confluence with the 50 EMA. Right now we can see that the price here is battling the 800 estimated moving average, somewhere around $111.5 thousand. What's going to be most crucial to see here is a movement of the price back up into the, if I zoom out here, as I've been going over for the last number of videos on various time frames. We can see on the 4-hour, this ascending uptrend here, this zone had been intact since late April of this year. Getting back above this is going to be crucial. It's, for all intents and purposes, synonymous with the 200 EMA and getting back above it. Like I said, with the swift rejection here, going back to October 21st, we rewind back a little bit more in time, go back to the peak, or really the all-time high at this point, at around $126.3 thousand back around October 6th. We can see that ever since the price here lost this 200 estimated moving average right allowing here, around October 10th, leading into the liquidity flush that occurred. You can see ever since then, setting the local low here, we saw the price bounce up to the approximately 200 EMA and also see rejection here. So as I'm painting the picture here, we can see that the 200 EMA is so far post liquidity flush been holding up as a resistance. Like I said, it's lining up here, finding confluence with the ascending resistance zone that I pointed out that had been intact since late April of earlier this year. So getting above this is going to correspond to the range of anywhere from around 113,000-14,000 upwards towards around 115,000, but more critically above that here, basically with this horizontal rejection zone here approximating $116,000. And then even more so above that, anywhere within this kind of general range right here. So anywhere from around $121, $122, $123,000 to give range. If we see Bitcoin beginning to enter that range and not find resistance, eventually at some point breaking out above that, then we could reasonably expect a movement back up to the all-time highs here at around 126,000 and actually continue higher, finally reaching $130,000 and potentially even higher. If we look here at the RSI on the 4-hour, we can see the 618 here has been a crucial rejection zone. So getting above this, which this has been kind of a, especially in recent videos, going over these updates for Bitcoin, the 618 here on whether it's the 4-hour, the daily chart, number of charts, has been quite a significant zone. You can see, for example, here, if we go back to the support found in the ascending uptrend on the 4-hour spanning to the daily, even to daily and higher, when we saw this bounce back in the end of September, once we saw the RSI moving up here to the 618, breaking above it and getting oversold to the degree of around 80, this is when the price moved all the way up to the current all-time high of around $126.3 thousand. So that's going to be crucial to see, especially if we start to see the price come up here to the 200 EMA, this what was a support zone. Hopefully what we won't see here is the price move up to this zone, find resistance, come back down to the 50 EMA, not find support here and continue to go lower, eventually to the point of losing this horizontal support here and continuing even lower. Now I definitely think that here moving into this 12-hour chart, there's always more potential for the downside. Another test here of the 382 of the trend-based Fibonacci extension, we can see here that this horizontal support going back to late April to late June, totally see a retest of this once more. So that's just approximately $101,000. The 800 EMA sits not too far below that at around 98,000. So that's totally possible, especially if we see, zooming in here, the uppermost descending resistance could come into play, leading up to around 112.5 thousand. Also finding confluence with the 50 EMA band here, and also this lowermost horizontal resistance / support zone that I've pointed out in past videos. So we could totally see rejection here back down to around 98,000. And also, which, I mean, this is something I was entertaining and bringing up many of weeks ago, definitely over a month, maybe even 2 months ago at this point, for Bitcoin to go down to approximately $95,000 to $90,000 and still find a bounce there to continue to go higher, upwards toward $130,000, $140,000, $150,000 and higher. But zoom back out here, we'll see that the RSI here, the Bollinger Bands are fairly compressed. It's gotten quite oversold with these recent lows corresponding to the liquidity flush and the lows set after said liquidity flush. We've seen the, if I believe so here, the RSI has gotten not more oversold, just a tad bit less oversold than going back to April 7th of earlier this year. So we're, basically the same level or degree of oversold here, going all the way back to when the price was hitting the 50, or not 50, but the 800 EMA at around $75.5 thousand. So the fact here that we're seeing the RSI here essentially equivalently as oversold as around $75,000, yet the price is bottomed out at around $105,000, $106,000. That's a nice sign to be seeing there. You could typify it as not even an exaggerated bearish or hidden bullish divergence, but kind of encroaching upon that. We can see here really the whole idea is the fact that when you see these prices here extending towards the upside and finding growth here, as you can see towards the upside, and you see that the beginning of this uptrend move was here, as I pointed out, somewhere around 32 on the 32, 33 on the RSI, and then during this uptrend we see the price moving up. Now it's been going sideways basically with a slight upwards bias, now bottoming out, like I said, around $105,000, $106,000, yet the RSI most recently at its most oversold hit about 34. So like I said, it's basically flatlined out just about with that past RSI low, which is generally a good sign. And it's also the fact that, like I said, you can see that the 800 EMA was a bounce zone here. As I pointed out, in potentiality, totally could see a move down to the 800 EMA, also approximating this 382 here of the trend-based Fibonacci extension that goes from this low to this high to this low. So that's from around August 2024 to the peak set in January 2025 to the lowest set in around April of earlier this year in 2025. And again, one of the things I've pointed out plenty of times in past videos is that you can see here the 800 EMA has been a crucial support going back to really the earliest moments of this bull run. The bear market low here set during Q4 2022. We saw the initial movement towards the upside here towards around $30,000, with the price eventually bottoming out at around $25,000. You can see here roughly respecting the 800 EMA. But ever since this initial preliminary really setting the stage, setting the precedent for the current bull run, after here, as I've already shown, you can see that as we could see here with the bottom at around 50,000, 52,000, the 800 EMA was support. 800 EMA was support here at around April 10th or so. And as I've already said, we could totally see that happen again, down to around $97,000, $98,000, potentially even seeing some wicks lower as well, like 95, 90,000, especially if there's another liquidity flush type event or some other, black swan event or black swan-like event happens. Who knows what could be upon the horizon? Anything is possible, but that is definitely something to entertain. Now here, as I move into the 2-day chart, this is one of the big updates that I have for this video, really pointing in and honing in on the overall bull run structure, this uptrend that Bitcoin has been in since Q4 2022, where the two main factors here is going to be the ascending uptrend. As you can see here, this blue zone, this has been the final lowermost bastion of bullish hope across the entire time span of the current bull run for Bitcoin. And as you can see here with each of these zones created by these vertical yellow dotted lines beginning from the beginning of the current bull run leading to the most current time here, we can see that down here on the RVI, this is when it gets into the oversold zone. So that's anywhere from around 25, I believe. I'm not sure exactly what the value is. I forget. So 26 and lower, where we can see not only is this a period of time, a small period of time, a window of time to buy at the most opportune moments, going back to the end of 2022. Not only is the RVI within the oversold threshold here, 26 and below, but that is also corresponding to, as you can see here, each of these yellow zones, when the price is hitting this blue uptrend zone that I mentioned. There was not one here back in April 9th because although the price is hitting the blue uptrend zone, the RVI was not as oversold. It did happen back here around March, early March, just shortly before I did enter this blue uptrend zone. So for all intents and purposes, I mean, realistically, I could just go ahead and really kind of may as well as put a whole zone here that characterizes really the entire zone beginning from around, like I said, basically the beginning of March leading into roughly mid-April here in 2025. And moreover, as we see here on the RSI, the oversold zone here along the 382 with the bear market bottom hitting around 30. We saw something very similar here back in August, late August of 2023. Same thing here leading into early September 2024. Here as well back in around March to April 2025. And we're seeing something very similar currently. Totally could, as I've already said, see a movement down further. If you look here on this 2-day chart, the 200 EMA sits at around 97.5 thousand. You can see here that the 200 EMA, such as the 800 EMA was on the 12-hour chart, has the exact same relationship to price here on the 2-day. And again, further bringing potential plausibility to the idea of seeing Bitcoin actually go lower here, with the RSI still definitely having room to go down even further, closer towards around 30, lining up with the overall trend. Now, zooming in here on the 2-day chart, we are still, I mean, Bitcoin's really at the very bottom of this zone. It's walking on a tightrope, but the candle close support, this uptrend, this uppermost black dotted line here, and then cloning that and bringing it down here to the wick low, you can see that this broad uptrend zone is still technically intact, and we're seeing a deviation down towards the lowermost portion. Definitely with respect to the candle close trend line itself, we're clearly seeing this deviation, which could be, especially in light of the liquidity flush that occurred, we could be seeing this kind of scare tactic being played. The fear and greed has obviously entered into extreme fear going all the way back to around October 11th. The Bitcoin's been in fear since October 10th. So for the majority of October at this point, with roughly a week left, there has been a predominant sentiment of fear, which is interesting because October is typically, Q4 in general, one of the better performing years, and typically the sentiment, obviously, along with that better performance, is going to be in a positive manner rather than a negative manner. So we are definitely seeing a wrench thrown into the historical trends and patterns of Bitcoin, which I think personally makes a lot of sense if you think about where we are here currently. So I'm moving here to the weekly chart, seeing the current bull run that we have here for Bitcoin, where we're seeing this gradual stair stepping that looks, in my view, a lot like a kind of lollygagged impulse pattern with around 5 stages, as I pointed out, where we can see stage 1 here, stage 2, and then stage 3 in terms of just counting those bullish legs outside of those 2 corrections in between those 3 legs. And along with this, obviously, we've had the Bitcoin spot ETFs, the institutional interest in adoption, the growing global recognition, and just overall acceptance in terms of sociopolitics. You think about the American administration and Donald Trump's pro-crypto stance, and just the in general pro-crypto, pro-Bitcoin stance growing across the globe, varying from various different sectors across the board. And where we can see here currently, with now bringing the liquidity flush into this, where we're in October, typically the whole idea is that people are going to generally expect for October to be good, for it to be positively performing, which, interesting, going back to this 2-day chart about October, is that we can see here that the beginning of October was basically here, and then the first week of October looked fantastic. He had some high volatility, high volume candles here. A new all-time high was set, and all of a sudden we see this inverse V-shaped pattern, liquidity flush, total fear and panic spread across the market, and we're seeing, as I said, these extreme fear levels. All the while Bitcoin is still above $100,000, sitting at around $110,000 right now, which is very interesting nonetheless to see, which to me conveys the whole kind of the idea of, you think about market makers and you think about the people that are especially factoring in the institutional adoption and interest, the bigger players within the overall market environment, and the manipulation that goes on, and the tactics used by these people with more wealth, more power, more influence in order to scare out the small players, the retail money, the dumb money as it's called, so as to see these, such as we do with like these liquidity flushes, where we see these rapid drawdowns of pretty severe percentage drawdowns. This time around was more so for a number of altcoins. What's interesting about this liquidity flush event is that there wasn't too much of a significant drawdown in terms of percentage on the charts, outside of a number of altcoins, as I said, but we did see that record-setting liquidity flush actually occur. Now, if we look here at this weekly chart, we see the simplified moving average, the 50 SMA, and this plays a very similar role to the 200 EMA on the 2-day chart and the 800 EMA on the 12-hour chart. It's not an exact role, but it is very similar, where we can see here during this preliminary stage of the bull run where this precedent was being set, we saw the price here get above this 50 SMA. Ever since then, it's just been off to the races. Bitcoin shot up to 75,000, came down, hit the 50 SMA around $50,000 as a range, moved up to around 108,000, came back down to the 50 SMA at approximately 77,000, and then most recently moving all the way up here to at highest around 126,000, and we are seeing a move down to, at this point, in proximity to the 50 SMA, not quite touching it just yet, whether that be with a wick or with an actual candle close or an open of a candle. So as I've said, there's still plenty of potential to come down lower here. The 50 SMA does sit a bit higher than some of the other the EMAs I pointed out in past charts. That go down to around $97,000, $95,000. Here the 50 SMA sits at around $102.3 thousand. There's totally room for some wicks lower, which could meet that around approximately, give or take a couple $1,000s, $95,000 price target, if there is a bit more downside to see here, which at this point, if there is, if it went down to around 95,000, that's around a 15% drop, somewhere around like 90, 91,000 be around 18%. So we could see up to maybe 5, 10, 20% at most drop. And in my view of the market, that wouldn't be a reason to think that the bull run is over, as I've said and stated plenty of times in the last number of videos. My final line in the sand here is the local low going all the way back to late March, early April of this year at approximately 78,000, with this wick down here at around 75,000. If we see a weekly candle close below here, and then especially if we start to see the subsequent candle open below that and then close below, and we just see multiple iterations of candles closing below this horizontal support here, then I think that personally will indicate that the bull run is over. It would be a macro lower low. We'd see this ascending double top formation here, this M pattern, which would have a price target that would make the overall retracement here from the top pushing down to over 45%, which is historically aligned with Bitcoin beginning bear runs. When you see a move towards the downside initiating that reaches around 43 to 45% and then continues to go lower than that, hitting around 50% or higher, then typically according to history, that means that the bull run is over and that there's a bear market in place. Now, outside of that, we can see here, zooming in, that taking, again, we see the trend-based Fibonacci extension here from low, high to low. The 0.5 has been a very interwoven, a gridlock where we can see here, and by that I mean we see these two resistances here, brief resistance here, the price moves up to around the 6 and 8, comes down, finds support, bounces back up again, and currently the price is finding support. So we're seeing this kind of, like I said, this interwoven gridlock where we're seeing the price was below it here, finding resistance, now it's finding support and support and support. And this is very clearly so here. This is a crucial area of resistance slash support. And the price is having a hard time significantly deviating away from the value of approximately $108,000 to $110,000. And so we can see here that this is clearly going to be a very critical decision point. With that also being further emphasized by the 50 here, the 50 SMA that I pointed out, and really also factoring in the analysis of the prior lower time frame charts. Right now is a very crucial point to where if we can come down to this local low here of around $101,000, we could potentially see something like this, like I said, with some moving maybe down to around mid 90s, low 90s, and then I had to imagine we'd probably find relatively quick relief back towards the upside here. But this is going to be a very critical line in the sand, a very critical junction going forward in the price progression of Bitcoin. In best case scenario, obviously, support will be found just generally along this 0.5 towards these higher highs here, towards the 786, the 854, somewhere around $130,000 to $135,000, and then even higher going into the rest of Q4 of this year. But there obviously being plenty of reasons to still think that there is at least one more final full throttle impulse for Bitcoin. Obviously, none of the top indicators using coin glasses I've been going over have fired. Now, a number of those are going to be lagging indicators, so I mean, you can kind of take that with a grain of salt. But the point is that literally 0 out of 30 of them have fired, and it's just very peculiar. Like I said, we're in this new era, this new paradigm of Bitcoin, where this market's really different with this institutional adoption, and we haven't really seen those nostalgic, euphoric, ecstatic periods of sentiment as we have with past bull runs, which are typically occurring towards the end, towards the peaks, which, I mean, again, like I said, we could be in a totally new paradigm and totally new era for Bitcoin, and things are just from here on out going to be drastically different, psychologically speaking, going forward. Now, if we look here at this chart, Bitcoin's clearly still here in the overall uptrend zone. In its lowermost bound, the lowest trend line here goes down to around $100,000. So like I said, totally could continue to come down to around $100,000. Maybe see some quick wicks down to as low as $95,000 to $90,000. But it's still going to be crucial to break this ascending resistance. This is an ascending resistance here that has been in place for approximately over 4 years at this point. And really at this point it's encroaching upon 5 years. Next year during February will be 5 years. So it's about over 4.5 years at this point been in place. And getting above this at its highest extent is going to be approximately 130,000, or my bad, approximately 133,000, which once that is broken, for example, in this chart we see the weekly, if we see a weekly candle close below here, or not below here, but rather above this uppermost trend, somewhere around the 382 on the uptrend characterizing the bull run structure here, then I think it's possible you could see a quick move upwards towards the 1618 at around 170, or rather $160,000 to $170,000. The 786 sits here at around 190, and then upwards even higher, somewhere around approximately $200,000, which is just generally, as I have been vouching for over a year, maybe even over 2 years at this point, that the all-time high is somewhere around approximately $230,000, give or take approximately $30,000 or so, 180K maybe, 170K at lowest, at highest maybe $300,000 approximately or so, as I'm not one of the people that thinks we'll see Bitcoin go close to $400,000, $500,000 and higher this bull run. That is personally not what I see as the most likely scenario to unfold. Now, if you look here at this monthly chart, really this is something I've been going over for a number of videos, but this to me is one of the most convincing things that I have seen while looking at the charts over the last number of months. This being the monthly Bollinger Bands, as I pointed out. Currently, the Bollinger Bands are compressed with the value of the Bollinger Band width being at 93.63. This is the most compressed the Bollinger Bands have been in the entire history of Bitcoin. Now, something very important about the Bollinger Bands is that it does not denote direction. Just because the Bollinger Bands are highly compressed does not mean it's going to go towards the upside, nor does that mean that it's going to go towards the downside. So it's totally 50-50 here. It could go to the downside. All this pressure that's being built up and compressed could be released towards the downside, but it also could just as equally be released towards the upside. And when you look at the broader context of the market here, fundamentally speaking, but really just speak within the specific context of this chart here in a technical sense, as I've already pointed out, and I want to reiterate this because I don't feel like this is one of the few things that I feel like can't be said too much or too often just because of how profound, at least I personally think this is. When you see, going all the way back to the earliest depressurization event here for Bitcoin and the Bollinger Bands, you can see that the depressurization begins with the divergence here of the Bollinger Bands. Now you can't see it on this chart, but extending it is obviously out, extrapolating it. This is what would have happened here with the Bollinger Bands. You see the first depressurization event. We see the second one here, and then it's just a rinse and repeat. We see the third one here, and then we see 4, and then we're heading into 5, but we have yet to see the 5th depressurization event where we see a intensely significant divergence of the Bollinger Bands, where obviously you can see here, for example, in 2015, leading here into 2016, early 2017, the Bollinger Bands were in a compression event here, moving into max compression here, leading into around April 2016, shortly after Bitcoin kind of went sideways and gradually traded upwards, but eventually at the onset of the depressurization event here, the intense divergence, this was the most explosive period of the bull run, and the same thing can be said here for 2020 to 2021, and yet have we seen the depressurization event? And the broader context here is, like I said, you're literally going all the way back to basically 2010 of Bitcoin's price history. The depressurization event here, which is historically lined up with these 4 most oversold periods of time, or not oversold rather, but most compressed times for the Bollinger Band width and the Bollinger Bands themselves, have always been bullish. This pressure has always been released towards the upside. So again, in summary, the Bollinger Bands are not saying it's going to the upside, but if you think about the broader context of the charts here, technically, other charts I've already gone over in this video, if you look at the fundamental landscape and the various positive and bullish signs that is putting within your awareness, then if we were to extrapolate this out, the more likely scenario seems to be that we're going to see Bitcoin continue to go higher here, rather than the bear market beginning at around $126,000. This is also one of the more notable charts that I wanted to go over in this video, the monthly, another monthly chart, where we can see the here I believe this is the 12. Yeah, so this is the 12 and the 24 SMA. The 12 is the blue SMA here. The 24 is the purple. And each time we've seen the 12 go below the 24, this was the bear market bottom in April 2015. Same thing happened here in February of 2019. And then it happened again here in September of 2022. What's crucial here is that the 12 SMA, you can see once the bull run begins, as you can see here, we see the price get back above it. This 12 is held the entire time until at first a retest here of the 12 SMA, a dead cat bounce leading into the rest of the bear market here, and then we just essentially continue to rinse and repeat. As you can see here, moving above the 12 SMA, it was support up until the point here where we saw a brief support along the 12 SMA with that dead cat bounce leading into the rest of the bear market. And then again here, leading into the W, the double bottom of phase 1 of cycle 3 for Bitcoin, leading into the March crash. Once the price finally got back above this 12 SMA, then shot up in one quick run from around $11,000 all the way to $64,000. And we see the same thing happen here where we see retest of 12 SMA, a relief, essentially dead cat bounce, and then leading into the bear market. Then we see a rejection here, fully solidifying this bear market, and then a quick and rapid movement downwards into accumulation here, where leading into the current bull run, as you can see here, that the 12 SMA here on the monthly has continued to act as support, which is here, this is essentially a monthly variant of the 50 SMA on the prior chart that I went over. And we can see here that the 12 SMA sits at $101.18 thousand. So it is very crucial that we did not see a monthly candle close below this 12 SMA. This would line up potentially, for example, if on those lower time frames we see a move down to, let's see here, this black line is going to be sitting at around 92,000. So I mean, anything at around, like I said, 98 to 95, $90,000 at lowest, potentially could line up with a candle close on the monthly here below this 12 SMA, unless it happens in a quick and rapid wick and then the price moves back above the 12 SMA. There's enough of a relief and within a short period of time that we see the candle close back above the 12 SMA. Now this also could be conveying or indicating that we won't actually see a move down to around 97, 95, $90,000 at lowest, so as to continue to respect this 12 SMA. But it's also totally possible that we do see like a candle close here below this 12 SMA. And that doesn't necessarily mean that the bull market's over, because obviously at that point we still wouldn't have seen that close below on the weekly or the monthly. The horizontal support here at, according to the monthly chart, the candle close was at around 82.5. So seeing a close on the monthly below 82.5 will definitely, even more so than a close below around 78 to 75,000 on the weekly, be a what I think a spell, casting desire for the bull run of Bitcoin, likely meaning that the bear run has begun and that $126,000 approximately was the all-time high. So, I mean, really the gist kind of stayed the same as I've been saying in the last number of videos, that there's plenty of bullish structure still intact. There's plenty of all-time high indicators that have been historically very accurate every time, basically. None of them have flashed, pi cycle indicators, so on and so forth. And even here, obviously, just to bring this up once more, which we can see here with the all-time historical Fibonacci extension here, this has yet to have been hit, such as it has been hit every single time during these past cycles, going all the way back to cycle 2 or phase 1 and phase 2 of that cycle for Bitcoin. Now if you look here again, the 12 monthly chart, still again, this could be just further showing us that there's still, the uptrend here is yet to have been met. I'm not saying it's necessary that it needs to be met, but it has yet to been met, so very well could be. We're still in that third year, where we could definitely be expecting, for plenty of reasons, further upside, which more so draws upon the analysis on this chart and the weekly charts most predominantly that I went over earlier. Now, lastly here, going into gold, we can see that there's going to be 24 SMA, 12 SMA, 50 SMA, and 450 SMA, respectively green, purple, blue, yellow. And every single time gold has bottomed out in a very macro low since around specifically March of 1970, going all the way into here again, interestingly enough, March of 2020, or rather 2001, bottomed out within the zone of which one of these is actually. So it's the 400, these two yellow SMAs down here, the 400 and the 450. So this is a zone here. Like I said, this is the macro, the most macro. If you wanted to be buying literally the absolute bottoms for gold, the best bottoms to be buying for gold, then buying within the range of this 400 to 450 SMA here has been what you wanted to do. And each time that's happened, funnily enough, it happens in March, or if you just kind of want to say January, February, March or so, the first third of the year. Typically, this is when this happens. What's even more interesting is if you go to the first peak, if we were to characterize this move here for gold, bidding in 1970, leading into 1980, around a 10-year move, is an ABCD pattern there. As I just highlighted, this first peak of the ABCD pattern was in December of 1974. We're just going to say, we're going to generalize it to quarter 4. Fast forward to, if we look at this, is another ABC-like move here. This peak was also here again in quarter 4 of 2011. To go to the final peak of the ABC pattern here, it was January of 1980. So I'll generalize this to the range of November, December of a year leading into that next year, January, February. And if we fast forward to where we are currently for gold, towards the end of a massive pump towards the upside for gold, it's very oversold, and I'll get to that at some point. But it's just very overheated, and plenty of ways of looking at the derivative indicators. And it seems that gold, at some point, it might still have some room to go to the upside, as I mentioned the last time I went over this. But what's interesting here is we're here in quarter 4 2025, leading into quarter 1 of 2026, and this is matching up with seemingly this temporal trend here. What's also interesting is if you look at the halfway points between each of these, this here in orange was August 1972. Then we go to this midpoint here, it was again August of 1977. The generalization would be July, August, September, or so. When we look here at this midpoint of the next ABC pattern, again we see August, and then the only divergence here, the deviation here, is this midpoint here happening around January, February. But for the most part, there's a very interesting temporal trend that may or may not be here, but nonetheless, it's very interesting because it also factors in with this, like I said, this 400 to 450 SMA zone. And what we can also see here is that we look here at the 24 SMA, the 12 SMA, and then the 50 SMA, where we see the green above the purple and the purple above the blue. Obviously, this is just what, as you can see, for here, and of most recent, this is just what characterizes the bullish movement, where we're seeing these SMAs in this order. And right now, it looks as if we are in a very similar stance to kind of the tail end of this final move back here, leading into the end of 1979, beginning of 1980, where there is, like I said, still more room to go to the upside here. I wouldn't be surprised if it pushes closer to 5,000. I honestly wouldn't be surprised if it has a massive run up closer towards 6,000-7,000 going into January, February of next year. The cup and handle pattern that could be viewed as right here on the price. That trend, or rather that price projection here, was that this black horizontal line was approximately 3.7 thousand. So that could be, again, everything else factored into this. We're in the top bubble of the cup and handle pattern, the temporal trend here. If we look here at the indicators, the RSI is currently sitting at 87. It's at its fourth most historically oversold point. Dark RSI is completely topped out. MACD is highly overextended. And as I went over in the last video when I went over gold, the RVI indicator down here at the bottom, you can see here that each of the times we see this oversold zone going back to the beginning of 1970. Here, that's anything above 80. So here, here, and here, that miraculously is lined up with each of the most notable structural peaks for gold, these 4 peaks here that I just highlighted. And they also always happen with bearish divergence. And if I zoom in here, we're seeing the first bearish divergence potentially shaping up. You can see the price here is extending towards the upside with a positive slope of resistance, whereas the RVI here is going towards the downside with a negative slope of resistance, a bearish divergence here in the oversold zone above 80. And every single time that has happened since 1970, we have seen gold top out shortly after we see the bearish divergence occur. So like I said, everything here factored into it. Gold could continue to go a little bit higher here. There could be a quick and rapid, 50, 60, 70, 80% move higher towards the upside, which would put it anywhere from anywhere upwards towards, like I said, pushing like maybe 8,000 at highest or so, leading into January, February of next year. I could totally see that, but it does appear to seem to be that there is a general kind of top zone that gold here is hitting, with the potential short-lived thrust upwards towards further price targets. It would be very similar to if we see, like, this is the first ABCD pattern there for gold, and then we see there's this extended bear run, and then we're seeing the second ABC pattern towards the upside. During the final 3 months of this run here for gold, it went up by 139%, and these were during the months of November to December to January of 1980. So we could totally see something very similar to that, where we see during these final months of this temporal trend a crazy rapid extension of gold here towards the upside. But it also could not happen as well. There's plenty of things, obviously, with retail being highly interested in buying gold now. Apparently, China's finding the largest gold mine ever, and I looked into these articles. One popped up again around October 10th, 11th, or 12th or so. But some of these articles that are talking about the same information go back to late last year. But nonetheless, it's all interesting. We're seeing gold pump very massively, yet we're seeing retail getting interested. We're seeing the idea of the largest, most bountiful gold deposit or gold mine found according to China, which to me is just, I think, all very it appears coincidental, but to me it just seems almost, just too good to be true, as if there's something being signaled here for gold. And that doesn't mean that it's going to enter into some major, macro bear run, but nonetheless, it's definitely at least seemingly getting close to wanting to have a cool down period and to at least correct to some degree. But if we are seeing ABCD pattern 1 here, and then we're seeing ABCD pattern 2 here over a 55-year period for gold, then what would follow in suit, if we're seeing a very macro trend and pattern here, then we would see an extended bear run here towards the downside for gold. But that was all that I wanted to go over in this video. Again, as always, none of this is meant to be financial advice. Take everything with a grain of salt, do your own research, come to your own conclusions. But if you want to, obviously, take my information and my view as one that is grounded in reasonability and just generally makes sense, then so be it. But all that being said and everything gone over, I hope you all enjoyed, and I hope you all have a wonderful day.